Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hi, this is Brian Smiga, co-founding partner at Alpha Partners. Alpha Partners is the early VC's pro rata growth fund. We work with over 1,000 early stage VCs to monetize their pro rata or their investment rights in their best companies when they lack capital. With me today is one of our oldest friends of Steve Brotman and myself, David Horowitz, better known as Touchdown Ventures, but now Cerity Venture Partners, a really exciting fund that he's going to tell you about right now. Welcome, David.
Hey, Brian, thank you so much for having me. It's great to be here.
Yeah, David, I think you really are a pioneer, and you've been a pioneer several times over. So let's go back to the beginning. Now, first of all, you're a University of Michigan grad. I saw the football on your shelf behind you. And I will say this, my career has crossed with many grads, and unlike any other major large university, I don't know if you guys over-index on private equity and venture or on tremendous entrepreneurs, but everyone from you to several hires that I've worked with in my life to Ben Sun on the Midas list, there's a wonderful group from the University of Michigan. How do you explain that success?
It must be the great professors that teach venture capital and private equity there that are training their workforce. That was solo self-promotion because that's my current role. I'm actually on faculty there as a lecturer teaching venture capital, predominantly to undergraduate students, although I do a few other things. But no, it's just great university, great business school, great focus on venture and private equity. And also it's a large school, so we do graduate a lot of people. And so the probabilities of having more alumni, but we're also a good community. We like to attract and help each other with recruiting and with career development opportunities and things like that as well.
But let's roll back the clock. You were an accounting major, and after a little bit of time in Wall Street, within 2 or 3 years of your graduation, you got into venture. Tell us that story. How did you make that transition? And you've been an innovator in venture ever since.
Yeah, so when I was in investment banking, that was during that dot-com era, like the 98 to 2000 time periods. But if you added the words .com to the back of your company name, you could go public. So that was when I started. So that's when I started getting interested in venture capital because I saw all these venture capital investors funding and generating returns. And also when I was in investment banking, I did a lot of work with the cable industry. That was actually where I focused. So I had clients like Cablevision, Comcast, Charter went public during that period of time. So I had this interest in venture capital. I had this expertise in the cable industry. And the third leg of the stool is my wife at the time was doing graduate school in Philadelphia. It's every possible sign led to Comcast, and Comcast was starting a venture capital division in that time period. And right place at the right time. I was the first person that Comcast hired. So that's how I got into venture capital, how I really got into corporate venture capital. And I've really been in both industries since 2000. I had the pleasure of working directly for one of the founders of Comcast, Julian Brodsky, and that's obviously an amazing person. Not only was he the founder, longtime CFO, head of M&A for Comcast, but also really a pioneer in corporate venture. Comcast didn't really need to have a venture fund at that period of time, but Julian said, this internet thing is coming, it's happening, a lot of new opportunities, maybe threats are going to be coming to Comcast, and let's go put this group together to go invest and find those opportunities. So that's how I got into the venture and corporate venture business. I thank a lot to the folks at Comcast, both Julian, another gentleman, Sam Schwartz, who still works at Comcast, Louis Toth is another person I work closely with, and several others.
Wow, what a great training ground. And Comcast became an iconic corporate venture capital firm, very, very broadly invested. You were there over a decade. And then you pioneered a little bit at Genicast. And then, of course, you started Touchdown from scratch. So there's got to be something in the name, Touchdown Ventures. I know you're now Cerity, but What was in the name Touchdown, and does it have a UM connection?
It does not. When I started iterating on this idea back in late 2013, early 2014, started iterating on this idea, can we start a firm based on the success of Comcast Ventures that could help corporations get in and help them professionally manage venture capital funds, corporate venture capital funds. And when you're going out and you're going and talking to corporations, you're going to have more success in pitching it. Sounds like you're really doing this. So we needed a temporary name. And so Touchdown Ventures is available. I'm a big sports fan. I never really expected it to be the permanent name of the firm, but one thing led to another. People liked it, and what was temporary became permanent. And the only connection to you, if you go back and look at our old logo, where the colors were maize and blue, which are the Michigan colors, but it was a good name, and I think we built good credibility. Sometimes people were confused that we were sports investors, which we did some sports, but we weren't exclusively sports. We were really about corporate venture, third-party management. And we did that business for about 10 years. Actually, it's a pretty interesting story. We incorporated Touchdown Ventures on July 1st of 2014. And you can't make this up. Sometimes life works this way. Exactly 10 years later, on July 1st of 2024, we actually signed our letter of intent to move forward with the merger with Cerity. More coincidence than anything, but I thought it was a pretty fascinating coincidence.
I love that. We like to say we entrepreneurs and even we pioneer VCs, we make our own luck. And I remember sitting down with you shortly after that in 2014 when Alpha was simply me and Steve Brotman, and you must have had a very small team. What was it like in the first year?
It was really tough. I expected it to be easier because I thought we had great credibility given the background of Comcast, but this was a new model, Brian. No one else had really done this third-party corporate venture model. And what I realized is we really had to evangelize a new model. It was either you start a corporate venture group by hiring your own team, or you don't do it at all. And we were creating a third option, which is do it with a third-party partner. And about 2 years into it is really when I would say things changed for us. And back in June of 2016, so we're about 2 years into Touchdown, we ended up signing a very meaningful relationship with Kellogg's, the big food and cereal company that everybody knows from Battle Creek, Michigan. And that really put us on the map. We got a great amount of press. TechCrunch wrote a great article, and you know how great of a publication and that was from the tech ecosystem. And that really put us on the map. And you could really point to that day as an inflection point. And I think other corporations who saw that news, or we were presenting, obviously we were promoting that we had, because that was public information, that we were working with Kellogg's. And it's like, okay, if it was good enough for Kellogg's, this brand that's from 1894, it's probably good enough for me. And that really led us to really grow the firm very organically from that 2016, really through and including post the merger with Cerity that closed about a year ago now, back in September of 2024.
Now, our theme is driving alpha, or how do we drive out performance? So let's take each audience in turn. For a great wealth management firm like Cerity and their clients, family offices, institutions, pension funds, insurance companies, and so forth, what's in it for them, both with Touchdown and with corporate venture capital writ large, to get outperforming returns?
That's a great question. We just have world-class expertise here at Cerity Partners, and that's not the part of the business that I work in. We've effectively retired the name Touchdown. Now that we're part of Cerity, so we're now Cerity Partners Ventures, but it really is the legacy Touchdown business, just under a new name. So we're still doing the corporate venture, third-party advisory and management work that we've been doing since 2014. But what's been interesting, because I'm relatively new to the wealth management space, but I've had the opportunity to meet with several of my partners. And these are some of the world-class experts on everything, trust and estate planning, tax strategies. We have a phenomenal team on private markets. We have a team that we call OCIO that manages, investments for foundations and endowments. We have a lot of experience working with world-class private equity fund managers, venture capital fund managers, real estate fund managers, et cetera. And all those are opportunities that Cerity can bring to its clients. And one of the other things that I've learned about Cerity Partners is, we're independent. So we're not out there like other groups being commissioned or trying to sell, our own mutual fund or other investment products. We really are truly independent. We're trying to bring, the best of what's out there in the world. And I think clients really appreciate that and want that independent fiduciary expert. And that's really what, Cerity Partners brings to the table. And it's just excellent client service in terms of how we work with our clients as well.
When you think about what Cerity saw in you, I don't know how the conversation began. Maybe how did the conversation begin? And then how did they fit corporate venture capital into their mix? Because you're now a tool in their tool belt. Just curious how that fit came together.
Yeah. Cerity, is consistently looking for interesting financial services, firms that it can merge into the platform. And that's what, Cerity has been doing since its inception, in the early 2010s time period. And we got to know another group at Cerity. It used to be called a legacy firm called Permit Capital that merged with Cerity a couple of years ago. They're based in the Philadelphia area. We became very close with the principals there, Adam Landau, Mimi Drape, Matt Taylor, a couple of other folks on the team. And as when they completed their merger with Cerity, we got to know Cerity. We eventually met with the CEO of Cerity and some of the other leaders. And we talked about what could we do together that was better than what we could do on our own. And we just discovered a number of different opportunities where we could help each other grow. We work with a lot of entrepreneurs, and knock on wood, but we hope all of our entrepreneurs are going to generate amazing wealth. They're going to need experts to be able to come in and manage that. Well, that's great proprietary, client sourcing opportunities for Cerity. Vice versa, Cerity manages and works with a lot of corporations, and some of those corporations may have a need for some of the services that we provide on the corporate venture side. And so that's our wealth management advisors and partners may have clients that are the CEOs or board members, and they have those relationships. So, we're a year into it, and we're really starting to see a lot of mutual value creation where, these two groups are better together than they are apart. And we have a whole kind of list of strategic growth areas that we're focusing on. And, the other thing for us as Touchdown, we really, I would say, in being fair, we overinvested on our team on what you would call the venture capital investment side. We probably underinvested. We had some great people on the back office and operations side. And we knew if we were going to continue to scale, when we merged the company, Touchdown was managing about 20 corporate venture funds. We had about $1.5 billion of funds under management, and we had about 50 plus people on the team. And we knew we were going to have to hire and scale on the operations side. And we would eventually need to bring legal in-house, HR in-house, finance in-house. I was actually, believe it or not, doing all of the finance of the entire firm from inception to merger, believe it or not, which is crazy. And the fact that Cerity can provide all that from a shared services perspective, because we have those world-class experts, that was very attractive to us and really solved the problem that we had as we were thinking about how we were going to scale the Touchdown business if we stayed independent.
I think that's tremendous augmentation of what you already do that lets you focus in your team on what you do best. Fantastic. I see the synergy on the two sides between customers and wealth. What is it that other venture capitalists need to know that they don't know about corporate venture capital?
Think about the terms corporate venture capital, especially that last word, capital. And so there's almost this perspective that corporate venture capital is really just another source of investment. And it is, but it's more than that. And that's the point. A corporate venture capital group can be a phenomenal gateway into the corporation. It could be a gateway to get a commercial relationship, a partnership, a marketing relationship. It could just be a gateway of getting feedback, as you know, for early stage, especially on the earlier stage side, or even a later stage company that's entering a new market. The best gift that you could get is feedback on whether the market is interested in your product or not. And how many companies do you know that have gone out of business because they didn't do that work around testing the market, understanding if there was a need and whether the price point was right and the market size was big enough. And so those are all things that a corporate I would say it's almost a fiduciary, responsibility. It's malpractice if a corporate venture capital investor is working with that startup and giving them that level of feedback and figuring out whether there's a bigger fit. So those are all things, even as a third party, that we do. We have counterparts within the corporations that we work with that are helping us and, taking a lot of the ideas that we're sourcing or diligencing. But that's a big part of what I think that really is a big differentiation between an institutional venture capitalist and a corporate venture capitalist.
Great. Now, so when early stage VCs think about inviting you, which is a basket of corporate venture capital funds, to the table for the next round, or founders as well think about calling you, what should be topmost on their mind?
I think it's some of the same things I mentioned, that we can help them with potentially a corporate relationship, commercial relationship. And then just there are a lot of institutional investors that have great domain experience, but our team has really built really deep domain experience when we're working in the food sector, whether it's with Kellogg's or with another corporation. The team on our side is really deep on understanding all the players, all the trends. We understand how co-packing works and how food is manufactured and how food is produced and food supply chain. And there's just a level of depth that not necessarily other folks have. And that's something usually that an entrepreneur wants, somebody that understands their business and can help them in their business, and also is going to, give them some room to be able to operate their business and not necessarily be in their face, which we don't obviously try to do like any good capital firm, excuse me.
So now let's come down to David Horowitz and his team, who you've trained. How do you characterize your investment thesis, and what should founders know about your thesis and your edge when they come to you?
Yeah, well, our edge really is these corporate relationships. So it really helps us in everything we do, whether it's attracting startup deal flow, whether it's being able to do better diligence, I think just even getting into deals. We've had entrepreneurs that have said, I would prefer to work with you and the corporation that you're representing, because that's a better investor than I already have institutional investors, and this is a better complement to my syndicate. So we see that a lot. And then we will help in any area we can post investment, but we're going to spend the most time on the business development side and on the corporate relationship side, because that's where we built the relationships, where we have the corporate relationships. And that doesn't mean we can't help with recruiting, or we can't help analyze their option pool or referee an employee conflict. Certainly we have the skill set to do all that, but we're going to be ultra focused on, and we track how many commercial relationships. So we may do, call it, within the whole Cerity Partners Ventures, formerly Touchdown platform, we may do 30 or 40 investments a year. We operate at scale, so we do more investments than your typical venture firm, but we'll do double, triple that of facilitating commercial relationships. Why? It's straightforward. We could do a commercial relationship with a company, even if we don't invest in, and that is part of what we're bringing to the table to the corporate partner that we're working with.
Wow. So I think it's a two for or a three for talking to you, because it could result in a commercial relationship as well as an investment.
And I'll tell you one other thing, Brian. We don't try to push it, but we have had some success where we've had multiple corporations invest in the same company, and the corporations have done commercial deals. And that's that multiplier effect, where if you end up talking to us, we have this broader network of corporate relationships. We don't make any promises. There's no guarantees, but we obviously put a lot of effort into, if that company is suitable to more than one corporate, then, we're going to push really hard to try to bring multiple investment and commercial opportunities to a startup, and only having to talk to a single group who can manage that. That is really one of our value. You talked about edge and value proposition. I think that's a unique one for us versus really anybody else in the venture ecosystem.
Now let's talk about risk. At Alpha, we like to say we de-risk venture for family offices and institutions and high net worths, because we enter at the growth stage, and we look at many factors, including the capital syndicate, new capital coming into the company, the customer set, customer economics, competition, and so forth. And so by grading companies in this way, we have a high success rate. I would imagine that working with corporate venture capital, there's less risk as well. And could you describe how you think about risk?
Yeah, I think that we will take risk, but it's usually more execution risk than anything. We're going to have whoever our corporate partner is on that industry help us evaluate whether the technology is ready for prime time. What we're going to do our own analysis, obviously, on the size of the market, the competitive landscape. And because generally we know those spaces well, we feel we're taking less risk than somebody who doesn't know that area. I think like any good venture capital every venture capital investor is taking execution risk. There's no such thing as that. We try to find those opportunities where we think we have the right team, we're in the right market, we think this is going to be the winner in terms of analyzing the competitive landscape. We think the technology risk is off the table. While we believe in the team, we just want to bet on the execution risk. So those are the types of opportunities. And what's interesting, I think, about some people will say that doesn't happen in earlier stage venture. And we think because of the things that we do, we can de-risk earlier stage venture. We will play at the later stages as well. Part of our thesis when you're working with these corporations is to be a little bit more agnostic to this. That may be where we're different than Alpha, where I know you guys are more growth stage investors. We will go earlier stage. We have done some pre-revenue investments. It is a little bit dependent on each corporate, because each of these corporate funds are managed separately. They all have different investment strategies and investment thesis and investment focuses. But generally, on an average basis, we will take some of that early stage risk if we can get comfortable with just taking the execution risk that I mentioned.
Okay, scenario. A founder is looking at your website, the corporations where you're running their venture capital arm, and they could be pre-revenue, early stage, growth stage, and they see there's a match. They know that talking to you, they're going to get intelligence, they're going to get product feedback, business feedback, and they may get a commercial relationship as well as an investment. How should they approach you? What do you need to hear from them?
I think, like anybody, we get a lot of unsolicited mail as much as anybody. And so it's hard, given the volume, to take. We do have an approach where we look at that, but I'd be lying to you if I said we trained ourselves and our team that there are a lot of low quality, poor quality opportunities. So anything, we love referrals come from a network. If Brian sends me a referral, we're going to take it seriously because we have a long-standing relationship with Brian. We know that Brian has evaluated it. He has probably done some level, you've done some level of due diligence that you believe that this is a good company. So it doesn't have to be from a venture investor. We do get a lot of referrals from venture investors, but we obviously get referrals from portfolio companies, from the corporate executives. And we're now getting a lot of referrals from Cerity Partners folks, because Cerity might be managing wealth, be a wealth management advisor, managing investment capital for an entrepreneur as well. So, and obviously that's a warm referral as well.
Very, very clear. And like Alpha, we source primarily from early stage VCs, or we work backwards from great companies to the early stage VCs on the cap table. And that's kind of our go-to. And it sounds like you have a broad set of relationships ranging from Cerity, its corporate partners, your corporate partners, and as well as venture capital community. So now that you've been freed up a little bit, David, you've got some resources to run the back office, run HR. What's next for you and for your firm? Where do you go next?
We're really focused on continuing to grow this platform. We still think we're in the early days of corporate venture. This model that we really pioneered about 10 years ago, it's still pretty new. And there's still a lot of white space in corporate venture. I think with new technologies like AI, we're going to see more companies are going to need to adopt technology. They're going to need to invest in technology. They may be acquirers of technology, more so than maybe what we've seen in the past. And so we think there's just a lot of white space for us. We've largely focused on the US, although we have had some success. We work with a couple corporations in Japan, a couple in the Middle East, Latin America. And we think our model is actually really interesting for outside the US. So I think you'll see us focus more on trying to prospect foreign corporations. If you think about it, if they don't have a presence here, that's a big risk for them. How are they going to go build out that? And most of these foreign companies want to have access to the US startup ecosystem because certainly no offense to any other ecosystems, but I still think we have the best startup ecosystem here in the US. And so we have a team that has been doing this for a long time. We have scale, we have access to deal flow. So we're a really good model for a corporation outside the US who wants to build a US presence and could really, get it up and running, really quickly, almost instantaneously for them, because our team is already operating at scale. So that's something that we're also acutely focused on as we think about the next stage of growth.
I think of Japan as a world leader in building teams in the US to cooperate with US venture. Do you want to say to any other exemplars of countries or corporations or sectors that you feel are ready to come into the US and partner with you?
I think Japan has been one of the most progressive in corporate venture, really led by groups like SoftBank, who've been doing it for a long time and have explored different models. So that's a good one. We've seen a lot of interest in companies in Brazil, certainly all over continental Europe. We're starting to have some, conversations in the Australia and New Zealand area. I think it's part of the same things that we're seeing. There's a lot of old line companies. They're everywhere. They're not just in one market. They're everywhere. They're waking up to the fact, led by, technologies like artificial intelligence, that they need to be more progressive on investing in these areas. And they're going to look at the US because that's the market where a lot of the innovation, a lot of this, startup capital is being funded. And I think I'm very biased, but I think we present a great option for those companies to get them to be at scale and be professionalized, almost instantaneously. So, but I think those are some of the markets, but I think it's a relatively universal opportunity for us.
Okay, so artificial intelligence has finally entered our conversation, and maybe this is a good note.
It took a while, but here we are.
But now we're going to talk about it. And so, David, you've been at this for 25 years, and I think you have a broader understanding of the challenges that large corporations face with each technology wave. I mean, you've lived through it all. Web 1.0, the advent of online, cloud, mobile, data, etc. Clearly, we are in a disruptive phase. So where is corporate venture headed in this world where AI is going to transform, amplify so many businesses?
If you break AI and just very simplistically into two parts, and obviously it's a very simplistic, I think you're going to have more horizontal technologies that could be like certainly some of the large language models or other infrastructure plays, whether it be a Google Gemini or OpenAI. I think the bigger companies, the Amazons, the Googles, I put OpenAI and certainly in that conversation, given where they are, they're going to win that space. And I don't think maybe there's a startup or two that comes out of left field that, like a Anthropic or something like that can be successful, but the larger players are going to win that space. I think the opportunities for the startup value creation is going to be on the vertical application side. I don't think Google, as much as they're an amazing company, they're not going to understand the problems of a particular industry and tune Gemini to solve that very specific. It may be too small for Google. Google needs, billions of dollars, tens of billions of dollar opportunities, or, take Amazon or Meta or whoever. And so that's where I really see the startup crop opportunity, where you'll have entrepreneurs, whether they come from small companies or big companies, that understand that industry problem, figure out how they can apply AI. They may be leveraging a Google Gemini or an OpenAI back end to build their applications. And I think it would be very smart of those entrepreneurs to align with corporate investors who can help them get an initial customer, bring good capital, bring domain expertise to, help them win. One of the holy grails of corporate venture that I've been trying to find for years is, what is there evidence that shows that entrepreneurs are better off taking corporate venture or not? And it's difficult to get return data, but I'd have to dig it up. One of my partners, Brian Legler, on our team several years ago did research. We actually looked at companies that went public because that data is a lot more available. And we looked at companies that had a corporate venture investor versus companies that didn't. And the companies that did actually outperformed post IPO. And it was enough companies that it's hard to say that it was I think it was hundreds of companies. So it was hard to say that it was kind of a coincidence but we'd love to have more data, but the more research, and maybe AI will help with that research, that shows the power of this corporate venture. I think that's a self-fulfilling prophecy. More corporations are going to get into it, more startup, and it's just the market will continue to grow. And that's kind of the bet that I've made for my career, and the bet we made at Touchdown, and the bet we're continuing to make at Cerity, that we're still in the early stages of this relatively, I would say, still emerging asset class of venture capital, corporate venture.
In closing, vertical AI, at Alpha, we've deployed about 64% of our capital, which matches the venture ecosystem in vertical AI companies, AI-centric companies in a single application or industry. Do you have an exemplar, without playing favorites, do you have an exemplar from your portfolio you might like to cite that's a good example?
We have a lot of great examples. I mean, we have companies that we've been able to generate some solid exits in AI for healthcare. We have a really interesting company called Case Text that Thomson Reuters acquired for a lot of money in the legal AI space. We've been investing in AI around insurance. We think that's a sector that really could use innovation to help, whether it's insurance agents, insurance claim processing. Our approach again has been what's the vertical problem and we can get access to those and understand those problems by talking to the corporate business leaders and operational leaders at these corporations, and then go find the world-class companies that can solve those problems. And those are just a couple of examples of some of the spaces that industrial is another one around manufacturing, being able to keep machinery at uptime, which obviously could be amazing cost savings. We have a really well-performing company in that area. So those are all some examples of things that we've been actively involved with.
Alpha's definitely going to come back to you for advice, David. And I hope other VCs will follow, and I'm sure they do. You've had some exits already in vertical AI, so I'm very happy to hear that too. We're still waiting for ours. You must be making some very wise choices. And it's been great talking to you today. It's a very pragmatic approach you have that no doubt there's a lot of headroom. There's a lot of growth to come. So congratulations on combining with Cerity. And it was great to see you today.
Well, thank you so much for having me, and congrats to you. I've obviously been, as you indicated, we started Touchdown Ventures at around the same time as Alpha, and it's just also nice to see that you guys continue to have success. You figured out a model that's adding value to earlier stage, seed stage VC firms and entrepreneurs, and you guys have built a great venture firm, and I'm proud to call you both a friend and a potential venture partner, investor friend. So look forward to continuing to find ways to work together, and congrats on all the success that you guys have had as well.
Yeah, let's keep exchanging ideas. And oh, by the way, we have just started Alpha Global. So like you, we're finally moving overseas with a primary focus initially on Israel. And we've already made 2 investments out of that fund. So we should talk. Okay. Thanks, David. Thanks for your time.
Thank you for having me. It's really wonderful seeing you. Thanks.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.